Picture this. It is Wednesday, April 15th, 2026. The mainstream financial media is staring directly into the camera and telling you to stay calm. They are telling you that the recent market volatility is just a healthy shakeout. They are telling you that the tech dip is a generational buying opportunity. They are lying to you. I need you to pause whatever you are doing right now. Close your brokerage apps. Silence your notifications. What we are witnessing at this exact moment is not a technical correction. It is a controlled demolition of retail wealth. Look at the raw, unfiltered data that they are desperately trying to bury beneath the headlines. Moody's Analytics and the Kalshi prediction markets are quietly flashing a code red. We have officially crossed into a 40 to 49% recession probability. In the world of macro finance, a 40% probability is not a warning. It is a death sentence for the current market cycle. We have crossed the threshold of no return. The Nasdaq is already bleeding out, down nearly 10% from its highs, and yet the average retail investor is blindly catching falling knives. They are hypnotized by the illusion of the AI boom. They are betting their retirements on a soft landing that simply does not exist. It is a mathematical impossibility. But while the uninformed crowd is distracted by the slaughter in technology stocks, a silent siphon is draining the lifeblood of the global financial system. Look away from the flashing red of the equity tickers and look at the real money. Silver has just violently fractured the $94 mark. It is not walking toward $100, it is sprinting. Gold is being aggressively modeled by the major banks to shatter the $5,000 an ounce barrier. I need you to understand this. This is not normal price action. This is a systemic panic response. This is the monetary alarm bell ringing in the dead of night. The soft landing narrative you have been fed for the last 2 years was a psychological operation. It was a carefully constructed mirage designed for one specific brutal purpose. Exit liquidity. The billionaires, the private family offices, the institutional giants, they needed you to remain calm. They needed you to hold the bag. They needed you to keep buying the tech dip so they could quietly and efficiently liquidate their multi-billion-dollar positions. They are currently executing the ultimate debasement trade. They know that fiat currency is suffering a fatal hemorrhage. They know the purchasing power of your dollars, euros, and pounds is evaporating by the hour. And so, they are moving massive amounts of capital into the only lifeboats left on the sinking ship of the global economy: hard, physical assets. The divide between dumb money and smart money has never been this catastrophic. The retail crowd is playing a game of musical chairs on the deck of the Titanic, while the insiders have already secured their positions in the gold and silver markets. You are standing on the wrong side of the greatest wealth transfer in human history. They are trading your fading digital illusions for finite physical reality. And by the time the evening news anchors finally admit that the recession tsunami has hit our shores, the doors to those lifeboats will be permanently sealed. The illusion of control is fracturing, and the catalyst is not coming from Silicon Valley. It is coming from the geopolitical fault lines of the Middle East. We are currently staring down the barrel of a global energy shock so severe that S&P Global has issued unprecedented warnings. Oil is not just a commodity, it is the lifeblood of the global supply chain. When the price of energy spikes violently, it acts as a wrecking ball through the entire economic structure. And this wrecking ball is swinging directly toward the Federal Reserve. Let me explain the terrifying math of the central bank death trap. Jerome Powell and the global central bankers are currently locked in a burning room with only 2 doors. Door number 1, they panic and cut interest rates to save the collapsing stock market and stop the bleeding. But if they pump cheap money into a system suffering a massive energy shock, they will ignite a hyperinflationary firestorm. The cost of food, fuel, and basic survival will triple. Door number 2, they keep interest rates high to fight the relentless inflation. If they choose this path, the 40% recession risk becomes a 100% certainty. The credit markets will seize, the debt bubble will implode, and the entire paper wealth system will crash. There is no third door. There is no secret escape hatch. The central banks have completely lost control of the wheel. This is not some theoretical white paper written by academics. This is happening right now on Main Street. Look at the corporate earnings reports that are being quietly buried. Supply chains are snapping under the pressure. Skyrocketing energy costs are annihilating corporate profit margins. Everyday businesses are being crushed between the anvil of expensive capital and the hammer of inflation. And what is the immediate, brutal result of vanishing profit margins? Layoffs. A massive, sweeping wave of job losses is building on the horizon. This is the moment your entire psychological framework regarding money must violently shift. For 40 years, the system conditioned you to invest for yield. You were taught to buy government bonds for a safe return. You were taught to buy tech stocks for endless growth. That era is dead. You cannot invest for yield when the underlying currency itself is a melting ice cube. The purchasing power of the fiat dollar is evaporating before your very eyes. Paper assets, from treasury bills to overvalued equities, are becoming fundamentally toxic in a high-inflation, energy-starved world. When the financial architecture begins to collapse, the rules of the game change overnight. You do not look for a return on your money, you look for the return of your money. You stop investing for luxury and you begin investing for survival. The smart money recognized this trap months ago. They have abandoned the paper illusions and are aggressively fleeing into the ultimate historic safe havens. But in their rush to secure physical wealth, they have exposed a mathematical glitch in the system, an anomaly so massive it defies logic. We have arrived at the great disconnect. Silver is sitting in the high 90s, preparing to shatter the $100 barrier. And yet, if you look at the mining companies that extract this metal, they are comatose. They are priced as if we are still living in the delusion of 2023. This is where the algorithmic trading bots that dominate Wall Street have made a fatal multi-billion-dollar miscalculation. They are pricing these companies based on the fear of a temporary pullback. They are completely ignoring the explosive reality of the cash flow. Let me walk you through the undeniable math of operational gearing. Imagine a primary silver miner whose total cost to pull 1 ounce of silver out of the dirt is $25. When silver was trading at $30, their profit was a mere $5. Now fast forward to today with silver pushing $94. Even if inflation drove their mining costs up to $35, look at the margin. The profit is now nearly $60 per ounce. The price of the metal roughly tripled, but the profit margin expanded by over 1,000%. It is not a linear increase, it is an exponential shockwave. And yet the stock charts are completely blind to it. This is the anomaly. But the financial disconnect is only half the terrifying truth. We must look at the physical reality. Look at the industrial titans building the next generation of AI data centers, electric vehicles, and solar infrastructure. They do not care about the spot price on a Wall Street trading screen. They care about physical connectivity. Silver is the most conductive element on the periodic table. Physics dictates that you cannot build the technological future without it, and you absolutely cannot print it in a central bank. The geological supply is collapsing. The easy, low-hanging deposits were exhausted decades ago. We are currently fighting a losing battle against thermodynamics, digging deeper and moving more earth just to extract a fraction of the metal. The industrial giants are waking up to this nightmare. The Apples, the Teslas, the Samsungs. They are realizing that paper futures contracts cannot conduct electricity. Because of this, we are witnessing the real-time breakdown of the COMEX paper illusion. These corporate behemoths are bypassing the algorithmic casino entirely. They are picking up the phone and calling the refineries directly. They are demanding physical delivery at massive premiums because they know that if their supply chain breaks, their entire empire halts. The paper market is a financial game. The physical market is a hostage situation. This brings us to the ultimate inescapable realization. The unmined silver sitting in the ground right now is the single most mispriced asset on the planet. The broader market is currently assigning it a value of almost zero. But when the panic truly sets in and the world realizes that geology has failed us, the market will be forced to recalculate the value of every single ounce left in the dirt. This is the blind spot. This is your insider validation. While the retail crowd stares at the tech crash, you are looking at the exact mechanical blueprint of the upcoming wealth transfer. Now brace yourself for the mathematical disaster that is about to unfold. To truly grasp the magnitude of what is coming, you must stop thinking like a retail investor holding a few coins and start thinking like a terrified fund manager responsible for $50 trillion in global pension assets. For decades, they relied on the 60-40 portfolio, stocks for growth, bonds for safety. But in a high-inflation, energy-shocked world, that portfolio is a suicide pact. The bonds are guaranteed to lose purchasing power, and the tech stocks are resting on an artificial bubble. So where does $50 trillion run when the house catches fire? They are going to look at the only historically proven negatively correlated tangible asset class left on Earth, precious metals. But here is the catastrophic bottleneck. If these massive institutions try to allocate just 1% of their capital into silver as an inflation hedge, it equates to hundreds of billions of dollars. The entire annual global supply of silver is worth less than a fraction of that. Trying to move that institutional capital into the primary silver miners is like trying to force the Pacific Ocean through a garden hose. The door is simply too small. When the pension funds, the endowments, and the sovereign wealth funds finally panic and hit the buy button, there will be no shares available at these current suppressed levels. Who in their right mind would sell a company that is printing cash at a historic rate during a currency crisis? The result will not be a gradual, steady climb. It will be a violent, uncontainable melt-up. It will be a vertical line on the chart. You will wake up to gap-up openings where these mining stocks double overnight purely because of the extreme scarcity of shares. We are leaving the era of paper financialization. We are returning to a brutal reality of tangible geopolitical dominance where the only thing that matters is who actually holds the physical metal. The institutions will realize that paper contracts are liabilities and they will be forced to buy the mines themselves just to secure the resource. The migration has already started and the bridge is burning behind them. But I must leave you with a final critical warning. The single greatest trap you will face is not failing to buy. It will be selling too soon. When this panic buying begins and your mining shares double or triple in a matter of weeks, the psychological urge to take profits will be overwhelming. Do not surrender to the trauma of past bear markets. Do not trade your lifeboat back into a dying fiat currency just because the nominal numbers look high. This is not a standard business cycle. This is a global currency repricing. The true value of these assets is only just beginning to be calculated. Do not trust the daily volatility and do not trust the mainstream headlines. Trust the irrefutable math and trust the weight of the physical metal. If you need the specific breakdown of the low-cost producers sitting on these massive unmined reserves, click the link in the description below for the full intelligence dossier. This is not financial advice. This is survival data. Stay safe.